Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong monthly demand and support area. In fact, from here, multiple rejections to the upside were created in the past. Every single time that the market tested this zone, it got rejected to the upside. And what we can see at the moment is that as the market is testing this exact same area here and rejecting it to the upside, we could expect more bullish continuation to be created away from this area, as already happened in the past, every single time that the market tested this exact same area. So the monthly time frame here looks very bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, everything looks quite bullish as well. We can notice how the market is currently testing and rejecting exactly the previous weekly resistance turned support here. And we can also notice that from a pattern standpoint, we have a very clear impulse and correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have a perfect 0.786 Fibonacci retracement lining up exactly with this previous resistance turn support, which actually creates confluence of support at this area, which we could in fact expect this market to test and then to reject to the upside, as the market is currently doing. So in a situation like this, we could expect more bullish continuation to be created away from this area. So also the weekly time frame looks quite bullish. We can also notice that if we look at the structure of this market, clearly the market went from creating lower lows and lower highs to then having a horizontal accumulation. And then the market created a new higher high, higher low, a new higher high, now a new higher low, and at this point, we could expect a new higher high. In fact, from here, we can see all higher lows created from this area and all higher highs, and the next one could be just around the corner if the market manages to print a new higher high, which is the definition of an uptrend, a market which is creating higher highs and higher lows. Now, dropping down on the daily time frame, what do we have? Now, from a daily perspective, I did speak about EURUSD a few days ago. I spoke about it after the market had created this M pattern and we were at this level. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, before we continue with the technical analysis here from a daily perspective and we go down in more detail, first, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds, so the big players in the market are doing. Now, if we check the data for the euro, what we can notice here is that we went from having 75.5k net positions all the way up to having 152.3k net positions. So we had a huge increase of the net positions on the euro. And keep in mind that all currencies on the spot are traded against the USD. So if you are checking the data for the euro, you're actually already checking Euro USD. So this actually means that institutions have been longing Euro USD quite aggressively, as is shown by these last reports. In fact, we can see how just with the last few reports, we had first 2,000 shorts getting closed and 1.6k longs getting added, then 11.1k shorts getting closed and 8.7k longs getting added, another 10,000 shorts closed, another 9.9k longs added, another 11k shorts closed, another 2.3k longs added, and then with the very last report, we can see another 6,965 shorts closed from an institutional perspective on Euro USD and 2,230 longs getting opened. So clearly institutions are aggressively longing Euro USD, which makes it stronger. So keeping that in mind and moving back to the technical side of this market, what we can notice is that at the moment, from a pattern perspective, we had a very clear impulse to the upside. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have the 0.32 and 50% retracements, which are lining up exactly with this previous level of support from which all this move to the upside was created, which is now again acting as support here. So if the market will retrace to this area, which has both the Fibonacci levels and also this previous support that is now still support, this actually means that we have confluence of support inside of this area. And a confluence of support area is definitely a zone inside of which we could get more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if the market will correct to this zone, how I could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, potentially what I could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns, the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. The link is both in description and in my bio. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.